The £150 million has been secured to allow us to meet those capital costs, if you like. The port, being the largest single investment that we've got, is the main area where those funds will be allocated to. So it's going to go towards the funding of the port, and by funding the port from those funds, it'll allow the other capital projects that we have to be funded from our existing reserves. It's likely that there'll be further investment needed on the port. We're currently finalising the contracts and going through the final, checking through the value engineering as well. We haven't got an absolute definite final price yet. I can't say that the costs won't increase as the project moves on. Construction contracts and construction projects are notorious for having additional costs as you go through, but the £150 million is a vast majority of what's required. The debut private placement basically means it's the first private placement that the government have done in the market. The private placement gave a much longer time horizon. Basically, it's been split into 5 separate sort of notes as we go along. So we're ranging from, I think it's 15, 17 years all the way up to 25 years. So it staggers when we have to repay those notes. And it gives us a much longer period of time in which we can invest money in the sinking fund that we have to do by legislation in our ordinance. That will be used then to build up a pot of money to allow us to then meet that capital repayment at the end of that period. The overall interest that we'll be paying is about 5.99% on the money that we've got. Interest is payable twice annually, so we're looking to draw down the money in April, and then our first interest repayment will be in October, and then it will be in April the following year, and then we'll have to make those interest payments as we go along. The actual capital element of the loans isn't repaid until the maturity of the loan note. So if you've got a 20-year loan note, won't be repayable until 2045. And I think the first one's due in 2040. That helps a great deal in terms of risk, if you like, because it means that we're not subject to huge risk to find £150 million at one point in time. We're finding it at different points along that time horizon. So the risk, if you like, of any major adverse movements in markets or investments just prior to when we need to make those payments is smoothed and reduced quite a bit.